What's up guys? Today I'm going to share my top 5 stocks to buy in the month of October 2021. I spent hours of research going over many different companies and I found a few that I believe to have huge growth potential this month. After months of seeing green in the markets, we're finally starting to see prices fall, but you would have known this ahead of time if you watched my previous videos on witching and stock market seasonality. When quality companies drop in price, we're looking at an early Black Friday and I am a sucker for good deals. So today I'll be going over the stocks that I believe are the best bargains with amazing growth potential over the next several months. Be sure to watch this video all the way through as I'll be giving my detailed analysis on each of these stocks, and I'll be covering relevant news, significant numbers, price action of the stock, and my price predictions. Also, per a few of y'all's feedback, I will be sorting these stock picks from most expensive to least expensive. So feel free to skip to my stock picks that may be more friendly for your budget. As a disclaimer, I am not a financial advisor and my stock picks are in no way financial advice. This video is for entertainment purposes only, and this is simply a compilation of stocks that I believe will do well in the coming months based on my research. As always, make sure to do your own due diligence before investing your hard-earned money. Also, I do have an interest in several of these stocks as I have a few in my portfolio as well, so it'd be in my benefit for you all to buy what I'm recommending. Anyways, before we get started, please gently tap on that like button, and I mean gently because 95% of YouTubers out there have you smashing and destroying that like button, so go easy on it and give your keyboard a break. Also, if you're new to the family, please consider subscribing as it helps the channel, and don't forget to turn your notification bell on so that you won't miss any time-sensitive content such as this video. Without further ado, let's get into my top 5 stocks for October. We're going to start off our stock picks with a familiar ticker, and this is PayPal, or ticker symbol PYPL. I mentioned it on August 30th, and if you entered a position that day, you would have notched a $20 gain in just over a week. And if you bought just one option contract that was close to the money, you would have been up by $1,000. Anyways, I'll go over the company again for those of you who may not have seen my video last month. In summary, PayPal provides a safe and secure method for sending and receiving money, and as of recently, they're letting users buy, hold, and sell cryptocurrency on their platform. A few weeks ago, PayPal released exciting news that they're exploring ways to create a stock trading platform for their customers in the US. They recently hired Rich Hagan, a brokerage industry veteran who was co-founder of TradeKing, an online brokerage which was bought by Ally Invest. With 10 million new individual investors entering the markets in the first half of this year and trading becoming a booming business for companies that offer it, PayPal's exploration of this niche is salivating. If you have ever heard the saying, buy the rumor and sell the news, then this is it. So we have quality news, but I'm about to blow your mind with the financials of this company. Coming over to the income statement, we're seeing massive year-over-year increases in total revenue, with revenue exceeding $21 billion in 2020. In the past 4 years, starting in 2017, we're seeing profit margins of 59, 46, 45, and 46%, all above our sweet spot of 40%. Looking at cash flow, we are seeing a free cash value of just under $5 billion, which can be reinvested in the company. Coming over to the stats, we see that PayPal has an attractive PB of 15, while its EV to EBITDA is sitting at around 48. It also has a beta of 1.15. Don't forget that PayPal has a $300 billion market cap, and this stock has literally 10x'd in the past several years. Looking at the daily chart of PayPal, we can see that aside from its initial run-up at the beginning of this month, it has been on a slide ever since, while hitting a low of $266. If you guys remember from last video, I said that it has a gap to fill from 289 to 296, and guess what? It filled it. Anyways, price is currently sitting at $260 at the 200 EMA. If you remember from my EMA video, these are price averages over a specified amount of time, so the 200 EMA on the daily chart symbolizes the price average of the last 200 days. This is a really strong level of support, and most times long-term buyers will look to place their orders at and around this level. Also, if you want to learn more on EMAs and why they're such a powerful indicator, go ahead, click on the link above. Anyways, with the current price of PayPal at such an attractive level, I'd suggest scaling into your position here while saving enough capital just in case it decides to fall further. My next buy zone is here between these green lines from 229 to 235. Analysts have PayPal as a strong buy with an average price target of 338 and a high of 375. Interestingly, this price target of 375 represents the top of the channel that price action just fell from. This is why charting is so important, and if you haven't already, don't forget to watch part 1 and 2 of support and resistance that are right here too. I'd be looking to scale into a long-term position with a price target at the top of its channel from $375 to $400. I touched on creating an investment plan before, but I want to drill it into you guys that the main purpose of your plan is to know when to take profits and when to cut losses. When day trading this stock and playing option contract with shorter expirations, look to nab your 10 to 20%, and if you have a longer term trajectory and are looking to buy shares, look at taking profits anywhere between 30 and 50%. Now, I want you guys to note that just because I'm saying there's a price target of $375 to $400 doesn't mean that you should keep holding going out until it hits the top of the channel, for example, because the stock market will do whatever it wants to do, and if you can set a predetermined percentage where you're going to take your profits, that'll be much more advantageous to you as opposed to hoping and waiting that it hits the top of the channel, and let's say it doesn't, then you're out of all your money. So just make sure that you follow very closely to your investment plan. Also be sure to look out for indicators that may suggest further movement to the downside, and be sure to have a stop loss in place. I like to place a stop loss when I lose 10%, but I know people who have a dollar amount that they will sell for a loss at. Alright, so the next stock that I see potential for this month is Zoom, or ticker ZM. Throughout the pandemic, I'm pretty sure that you have used this software at least once. If you haven't, then I don't know where you were at this whole time except for probably under a rock. Research company Gartner believes that more work will take place remotely after the pandemic, thus stressing the need for video conferencing despite a push for more jobs to be conducted in office spaces. Also, Zoom currently holds a 50% market share in the video conferencing space. This is definitely a company that isn't going away anytime soon. Looking at the numbers, we see a solid year-over-year growth in total revenue, with the company nearly doubling its revenue yearly since 2018. In 2021, they posted over $2.5 billion in profit. Coming over to the cash flow statement, we see that in 2021, free cash was $1.3 billion, which is available to be reinvested in the company. Looking at the PB, we see a value of 17.9 and EV to EBITDA of 17.5. With a beta of -1.53, we can see that Zoom can potentially move in the opposite direction of the market. With seasonality showing declines in the S&P 500 through the end of this month, Zoom could be one of those contrarian plays that absolutely takes off while the market is falling. And mind you, Zoom already had a very significant fall of its own. Looking over at the daily chart for Zoom, we see that it fell from its high of $590 and is currently sitting at less than half of that at $260. We recently broke through a strong support level at $270, which means that it's headed down to my buy zone between $229 and $247. The RSI is at oversold levels, which is another great buying indicator. I would enter a position between $229 and $247 and exit with a stop loss below $225. And remember, to confirm a break of either support or resistance lines, we must see an open and close of a candle above or below that line. Analysts are rating Zoom as a moderate buy with an average price of $375 and a high of $460. Both represent at least a $100 move from its current price point, so if you wish to enter now, just make sure to have your plans in place where you aim to take profits or cut losses. Next up on our list is CROX, or ticker CROX. Odds are you probably own at least one pair of these. However, if you're like me and don't have a pair, I hear they're pretty comfy, and the classic all-terrain clog in army green, item number 206340 in size 12, looks so sick. Anyways, getting into recent news, we see that the company posted stellar earnings at the end of July and that they are planning to achieve $5 billion in sales by 2026. To achieve this new goal, CROX has outlined a 5-year plan focusing on 4 key areas of growth: digital sales, market share in sandals, growth in Asia, and product and marketing innovation. CROX is also taking big strides when it comes to sustainability. As part of the company's commitment to achieve net zero by 2030, CROX has introduced a new bio-based cross-light material into its product lines. They plan to modify existing products to reduce its carbon footprint by 50% per pair by 2030. Coming over to the income statement, we see that total revenue has increased steadily every year, with the company bringing in over $1.3 billion in total revenue in 2020. In 2020, they also had a gross profit margin of 53%. If you recall from my video on how to assess a company like a Wall Street investor, which can be found right here, high margin tells us that the more a company sells, the more profitable it will be, and we typically like to see a value greater than 40%. Over on the cash flow statement, we see that CROX is just over $200 million that is available to be reinvested in the company, which will greatly aid them in their 5-year plan, which I detailed a few moments ago. Looking at the stats, CROX has a PB of 27 and an EV to EBITDA of 21. The beta is 1.84, which means that the stock is potentially more volatile than the market. In market upswings, this could indicate massive growth potential for the stock. Coming over to the daily chart, we see that CROX is on an absolute tear, seemingly creating new highs every couple of days. Now, I typically recommend stocks that have fallen significantly from a previous high that show signs of reversal. However, given the upwards trajectory of this stock, I think that now is still a great time to buy in. It has created several gaps in the chart, with the first from 120 to 124 and the second from $86 to $92. Now, I believe that price action will eventually come down to fill these gaps. However, I will be looking to buy in if the price falls to the 50 EMA represented by the orange line. Every time price action has fallen to the 50 EMA, it has had a strong bounce to the upside, and that level represents a very strong support level. So what I would recommend is to wait for price action to hit the 50 before buying, and then setting your stop loss with an open and close of a candle below the 50 on the daily chart. Analysts have have CROX as a moderate buy with an average price target of $179 and a high of $215. Moving on, we have Celsius Holdings, or ticker CELH. You've probably seen this energy drink in your local supermarket, and it is pretty much a thermogenic, calorie-burning beverage that actually tastes pretty good. And this is coming from an energy drink snob, so trust me on that one, or don't. Coming over to the income statement, we see that total revenue has increased substantially year over year since 2017. In 2020, we saw a margin of 46%, which is a great value. Looking at cash flow, we see that the company is currently negative, so let's go on and take a look at the stats. We see here that it has a PB of 37 and an EV to EBITDA of 531. In addition, its beta is 2.14, which shows that it could absolutely take off in a market uptrend. Looking at the daily chart of Celsius, we see that it is absolutely taken off already. It seems to be respecting the 20 EMA for the last few days and is currently forming a bull flag, which is a buy signal. If price action breaks the 20 EMA, we could head down to the 50 EMA at around $82, which has functioned as a strong level of support in the past. I'd be looking to buy if price action breaks the top line of the flag or at around $82 if the price falls there. Analysts have Celsius Holdings as a strong buy with an average price of $99 and a high of $115. Alright, so per popular requests, meaning like 10 of you who requested a super cheap stock, I'm including a penny stock for my last one. It is EYEG Pharmaceuticals, or ticker EYEG. EYEG Pharmaceuticals Inc. is a biotech company that is developing products for immune and inflammatory diseases. The company primarily focuses on eyes and the nervous system. It is currently developing PP001, which is a clinical trial for multiple diseases that affect the eye. It also has Panty Drop, which is in a phase 1 safety study for multiple diseases affecting the eyes. In the beginning of September, they just completed phase 2 of a study where they treat inflammation of the eyes. Given that this is a penny stock, fundamentals matter much less as opposed to volume and chart patterns. In the past month, shares of EYEG stock have climbed by over 12%. Although its year-to-date chart is disheartening, it does look like EYEG stock is making a comeback. I do like the recent golden cross, which is the 5 EMA crossing up on the 20 EMA. The 50 EMA could act as a strong resistance level, so I personally wait for a break of the 50 EMA with higher than average volume as an indication to buy. As always, make sure to have your plan in place to take profits. Because of how cheap this stock is, it is easy to get manipulated by big money and day traders, so make sure to set a stop loss in place. So those are my top stocks for the month of October. As always, remember to do your own due diligence on the stocks that I mentioned here. These are simply my recommendations based on my research and are in no way financial advice. If you haven't signed up for a Robinhood account already, go ahead and click on the link in the description below to claim your free stock. Ultimately, it's a win-win because you'll not only be supporting me and enable me to create more videos like this for you, but you'll also get a free share of stock as well. If you haven't already done so, please gently tap that like button and subscribe to the channel, and don't forget to tap that bell to get notified when I post a new video. I make weekly videos on all things stocks, and my goal is to help each one of you to achieve financial success through the stock market. Anyways, thank you so much for watching, and I look forward to seeing you all in the next one. Peace.